So
Yeah.
anyway, well, let me announce to everyone who you are, and because this is a recorded call. And everyone, this is Roger Kessler. I'm Liz Jones with the Jones Group. Roger, can you take a few minutes to explain a little bit of what you do and how you can help folks? And then we'll kind of take it from there with your topic today.
Okay. Geez, I was thinking of other things. I really didn't think of an intro. It's different when you intro yourself versus having somebody else do it. But I, I really like to believe that I help people, and a lot of us say that in a lot of different ways. The particular I'm retired from the Army. I retired as a full colonel. Gosh, about I don't even count how many years ago now. But I was looking for something else to do. My my mind said you're too young to retire, and I wanted to find something where I could help people. After a couple other starts, I was able to get into the financial services industry, and I've tweaked it as I've gone along to where I really feel comfortable in the space I'm in now. And it's actually in the for those that understand the industry a little bit, it's on the fixed side of it, with a focus in life insurance and annuities and those pieces. But that's just the product we use. Really, and we did a training call last night, or we do a national webinars with our agency at different times, and one of the things I talked about when you're meeting with people, and you're not just doing this business, but if you're doing any business, it's meeting people, being interested in people, and really following that old adage of speak half as much as you listen, and ask good empowering questions, and get to know people. And then if you have a solution for some of their problems, why wouldn't you share it with them? And that's kind of the way I believe in it, as a consultative educational way to show some of the products that are available out there. I mean, and I said this last night in our training. I said I would rather say no to people a lot of times than yes, because I want to make sure what I'm recommending is 100% fit. If it's not a fit, let's just say no, it's not a fit. And if I know other recommendations, go talk to this person, go talk to this person. That's more what you're looking for.
Yeah, be a resource. I like that.
Yeah, exactly. Well, and I know you definitely do that.
I try. I try. I've had the pleasure of meeting so many people in so many fields of industry. And of course, in the homeowners industry, um, there's certain needs that come up over and over and over again. But more importantly, I get to know the personalities of the folks over a course of a couple of months. And they become friends. And then there is definitely needs that happen through time. And then, of course, in my own life, I get to meet
Yeah,
people, and they become resources too. So I love it. It's it's what I do. I think
yeah,
that
yeah.
like you, it's the house is just a product that we move back and forth, but it's about people connection.
One of the guys I worked with was actually my accountant for a while. He goes, my friends are clients, but my clients become friends.
That's isn't that wonderful? I love that one. That sounds almost like Jim Rohn.
It does, doesn't
Yeah,
it?
it really does. Well, great. Well, let's talk a little bit about the topic that was near and dear to your heart. And if I'm not mistaken, it went an insurance product that you don't have to wait till you're gone to use or something
Yeah,
like
you don't
that.
have to die to use. Um, and I'm kind of visual, so I have a couple slides, a little scenario, and
Awesome.
I if I remember right how to do this, I think I can share my screen, right?
Can absolutely.
Uh,
It's at
there
the
it is.
bottom of your screen.
Yep. Okay. Share this. Get it back up to screen. Okay.
Oh,
So,
great.
yeah, I mean, I kind of summarized it. I go living benefit life insurance,
Hmm.
and there's the other one that we were starting to talk about. It's just, it's people go life insurance is life insurance. I mean, either what was that old phrase? A rose, no matter what you call it, still is a rose. Well, life insurance is still life insurance, but like any industry, it's a competitive industry. And if you want to set yourself apart, you come up with other ways and methods and advantages you can put into a product to make it even better than just a base product. And
Hmm.
one of the things that they started about a dozen years or so ago, that a couple gentlemen within one insurance company, a company that I like representing. I don't want to get into company names and all that stuff because there's others out there. It's the concept I want to talk more about. Is they developed what they called living benefits. They're technically called advanced benefit riders, where you can you can use some of your death benefit for other things. And like we say, life insurance you don't have to die to use. So one of the ways that I like to explain it, hang on a second, realize my computer's unplugged. I don't want it to die on me in the middle of this. So if it's okay, what I think the easiest way, if I can just take you on a little
Sure.
journey and explain it. Is that all
That'd be
right? So what I want to talk about is we're going to go from point A. Point A is today in your life. You know, a lot of us try to put assessments. So I should have done this, should have done this, we should have done that. Put all of that aside, just take an assessment of where you are today. And we're all going to travel along this timeline to point B. Now, I'm saying point B is retirement, but not just retirement, retirement and beyond. And those of us that have been around for a little bit know that this timeline is not that straight and flat as we go along. So as you're going along through there, you'll come across some hiccups. You may have, and there's actually a regulatory and tracking part of our industry called LIMRA, LMIR. I forget what it stands for, but they have said that 1 out of 2 men and 1 out of 3 women over their lifetime will encounter one of these hiccups that I'm going to talk about. The first one, I'll just summarize, there's different names for these. It's called a critical illness. And those are things like stroke, cancer, heart attack, even Lou Gehrig's disease, something that if it's not treated properly, there's probably a good chance that you could die within a year. And, many of us out there, and you may even be thinking as soon as I say stroke or cancer, almost everybody either has experienced or knows somebody that's a friend or family that has. So that's one of the things that can come up. The next one is a thing called chronic. And by chronic, we're defined as there's activities of daily living. The industry calls them 6 activities. It's whether you can go to the bathroom by yourself, go to get in and out of bed, feed yourself, those type of things. So they define chronic. If you can't do at least 2 of those activities over a 90-day period, you have a chronic illness. And, a lot of people think, well, that's long-term care. That's for old people. Well, more than 40% of the people that have these type of symptoms are under 65. Wow. And it can be from a lot of different things. It could be from a car accident, from a, skiing or snowboarding. Could be from anything. It's just and another one is, which is more typical for older, is if it's severe cognitive impairment. So things like dementia, those things where you can't function by yourself with it. You need the significant help of somebody else. So those are chronic type things. Another one that I want to address is called terminal. Now, we all know that our physical body is not going to last forever. Those of us that are believers know that our spirit will continue. We're going to go see our Father, all of those type of things. But we know that we're all going to leave our bodies at some time. But this particular is if you get diagnosed with a terminal illness, and typically in our industry, you'll go 12 months out. If you're diagnosed within 12 months, you could access some of your death benefit to cover some of the needs while you're still alive. Well, this company actually goes 24 months out. So it gives you a lot more flexibility. And one of the examples I like to use is if you do get Lou Gehrig's disease, there's no known cure. You are going to pass at some point. It's just how long is it going to take? And typically, I had an uncle pass away from it, and your body, from the outside in, starts shutting down. And at 2 years out, you're probably can move around, and maybe you do a family event while you're still capable of doing it, and you bring some of that money for that. So, or you get to the point where you can't work, you can bring some money forward to help cover some of the family needs and those type things. And, we don't want to use, hopefully in this journey from A to B, you have been saving some money for the retirement, and the beyond to do the things, but spend time with grandkids or travel or those house projects. And we don't want to use up that money for bad incidents. There are other ways to do it. And one of them I want to talk about is there's life insurance that has what I was calling before. Um, I call them living benefits, but accelerated benefit riders. One company calls them accelerated death riders. There's all we call them different things, but there's a way to bring money forward. So let me do a little example real quick. So how much do you think is the average income of people in the United States?
50,000 maybe.
You're right on. Actually, it's a little bit more than that. I think the last I saw was like 55, 58, but 50 is real handy to make it easy math. And so in our industry, we kind of say that you can qualify for at least 10 times your income in life insurance. So if you qualify for 500,000 of life insurance, of course, then you always have to, figure if it fits in your budget and those other things. But for this, you can qualify for that. Now let's imagine that you're going through life and one day you don't feel that good. And not in this era, but not that kind of feeling bad, but just a normal, you're not feeling good. But so you go to the doctor and the doctor says, I have good news and I have bad news. And, so I don't know how you look at it. A lot of people, which do you want, the good or the bad? In this case, the doctor gives them the bad news first. So you have cancer. And you give them a couple minutes to recover. And then you give them the good news is that because we caught it early, we really believe that we can beat this thing. Now, with the treatments we're going to do, you may not be able to or feel like going to work for a while, because if you've known people going through it with chemo and or just some of the things they're doing because of the immune weaknesses, they want to segregate themselves for a bit till they're recovered. So let's say if you can't work for 6 months, how much income do they need to replace?
I don't know, that 6 months, 6 times, that's a half the year, right? So
Yep, half a
25,000.
year.
Right.
Yep, 25,000. You'd be surprised how long it takes some people to figure that out. I'm like, you're making 50,000 a year and you can't work for half the year.
I
How
think
much income? And sometimes I catch them off guard. They're not expecting to get a quiz as we
that's
go through
it.
this.
That's exactly the only reason why their brain is
So
listening,
what
not
you
not
do?
processing that.
Yep. So what we do is we take that 25,000 from the 500,000, and lowers your death benefit, brings cash for it. But because your death benefit is smaller, it actually lowers the premium. Now, like anybody in many of these industries, we have to put a little disclaimer on here. This is just a hypothetical example. You can't do this if you have a hangnail or something. There has to be one of these qualifying incidents, and then it's based on severity on how much you would get based on it. And the other one the state of California makes to say is this is not a long-term care policy.
Right.
There's different things that this does as a rider versus a long-term care. Some things are similar, some are different. Each one has its own pluses and minuses, and I don't want to go in detail on this, but I can explain to somebody if they want to know more. And here's the other part is that, well, if you have an incident, hopefully you recover from it, but the remaining face amount could be used for other occurrences. So it's, if it's now the only one that, and I heard this other day on training, I thought it was funny at first, but it does really make sense. You can only claim terminal once. You can claim, cancer more than once or stroke more than once, but it makes sense when you say, hey, terminal diagnosis, well, you only get terminal once. Although what we have found out that many people that have taken the terminal because they stop working, they focus on their care, that many of them have recovered from what was considered a life-threatening illness. So it can be pretty powerful. Now, any questions on this part of it?
No.
So one of the things that I want to step into for a second is that, even though we're talking the living benefits and for life insurance, we know there are multiple types. So this could be on either term policy or on a cash value policy. And so I want to kind of address some of the functions of that in a manner that a lot of people don't think about. And I'll do it basically saying, making a savings and protection plan. Because if we do a cash value policy that has the living benefits, it can also have a savings component. And so let's imagine if you were going to build the perfect savings component, especially involving taxes and things, what would some of the components be that you would want? Well, how about deductibility or pre-tax? Wouldn't it be nice if you could have that as a function of this savings plan? Then tax deferral, and then, people do 401ks and all that stuff. And I don't think most people truly understand the power of tax deferral and the fact that, money that makes money can compound and really get going. And then it becomes just a matter of time. The more time you have it for it to work, the more it can grow. Then the other thing is, if you have a 401k, hopefully people are planning out there, or an IRA, that when you take it out, it's not tax-free. Uncle Sam's waiting to get his taxes, but wouldn't it be nice to have a tax-free income too? And a lot of people start going, whoa, 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 all this is impossible. Let's just kind of, let's build it first, and we'll talk about it. It'd be nice to have all this. Another one is, you want to have a good rate of return. I mean, you could put some of this into bank, and we know banks make hardly anything right now. Wouldn't it be good to add a market-driven rate of return? Maybe not all of the upside of the market, but maybe 80% of the upside would be kind of nice to have, along with the fact that safety. Now I say no downside interest rate risk. It's not the interest rate. It's this, that the money you put into it has a floor. Once you put it in, it won't go down. And then when it makes money, it keeps laddering up, and you have a new floor and keep adding to it all the time. And that's pretty powerful. And then liquidity. If you're in a 401k, IRA, it's your money, but other than exceptions like we have right now for a little bit, there's a liquidity issue. You can't get to that money until you're 59 and a half or pay a penalty for it. And then the last component I want to, a couple, there's one of them. How about if you had matching? Now in a 401k, typically if you get dollar for dollar, that's the first 3% that you put in. And then the next 3% is 50 cents for every dollar you put in, and then that's it. But imagine if you could get 3 to 1. For every dollar you put in, you get $3 added on top of that. And the last part is the cash in event of illness or death, the things I was just talking about, those living benefits. Now, there are a couple of them here that may not qualify for everybody. The only one is the deductibility pre-tax. That's only available in this particular program for people that work in a C Corp or a nonprofit. And there's other certain rules with that too. And the other one that may not apply for everybody is this matching funds. In order to qualify for that, you have to make at least $100,000, and it's a 5-pay. You do your part over 5 years. So it's a fairly significant amount, but not an unimaginable amount we help people kind of in the range between 25 and 65. And that becomes about 20,000 a year to about 60,000 a year, depending. And then of course, this is all, we were talking life insurance. So in order to get those matching funds, you also have to be fairly healthy with what we say in the industry, standard or better. Right. So that put my name up at the end.
Awesome.
That sounds cool. My slides, but let's, I don't know if you want me to take those off and we just chat.
No. So let me ask you a few questions. So what do you call this product?
So the one I was just showing, let me just go back up, is actually a life insurance policy called Index Universal Life. It's a cash value policy that has an income, a cash accumulation component. And there are people out there, and I won't name names, but some of the pundits out there go, never invest in a life insurance policy, it's too expensive. Well, it can be done incorrectly. I mean, it's like anything out there. Don't use a real estate agent. They take all your money. No, we know good agents that they're the ones, the reason you sell your house. And a lot of people don't realize in both our industries, getting somebody to agree to make that transaction is just the beginning of our work.
Right.
Most of the work comes after that, getting approved, getting a process, making sure. So it's the same. So if you have a professional that sets it up correctly and does the proper follow-up, because anytime you do an investment component to it, you don't want to just fire and forget. You should be doing annual reviews and making sure everything is in alignment. But back to the expense of it, if I do set up this program with, undo at least the last red check mark,
Mhm.
and it's a program we given a name. It's not a unique name. It's called Kaizen, but and that's Japanese. Basically, the interpretation we've used is incremental changes can make huge changes over time. And
Yes.
so just an incremental change to the life insurance policy program and an investment component of it, and using a way to leverage to get that 3-to-1 piece of it, we can actually over a 15-year period, you get the cost down to about point eight interest rate, or 80 basis points if people talk to us, so less than 1%. So done correctly, it's cheaper than a managed money. Done incorrectly, some of these, and especially if you use the some of the old policies, it could be as high as a 7% cost. But it's also, that includes the cost of insurance. So people have to know you're paying for their insurance as a part of this, but you also have a dedicated saving program, and that's where it really becomes up to the agent to professionally manage it. If you're going to do it for a cash component, you want to make it as efficient as possible. I always use the example, said, this is a Ferrari of the life insurance industry, but if you buy a Ferrari and you can't afford to put gas in it, what's the point? So you
Absolutely.
have to make sure that it's something that fits your budget to be able to maximize it and make it the most efficient you can. And so that takes a professional to align it in the right way.
Wonderful. Wonderful. Throw your slide up, the next slide, so that
The
for our,
first one, or my
their
last one?
contact information.
Yep.
So
Okay.
if one of our clients wants to learn more about this and have some questions for you, I imagine they can reach you at either that email or that phone number. And so
Exactly. Yep.
the name of your company
And
is
then,
Power Street Financial. Okay, great. It sounds like
yeah, so that's the agency I'm with.
excellent. It sounds like it does an all-encompassing of financial planning through insurance products, and so I think that's the
Right.
key that our audience needs to hear. If they're looking for a solution and they've been considering an insurance product for that financial
Yep.
solution,
Yeah.
they need to
And the
reach
other
out
one
and ask.
that we do is annuities, but I wanted to focus this one because people have heard of annuities, maybe not understand all of it, but most people have not heard of the living benefit function to a life insurance policy. So I want to
Absolutely,
address it because, and one thing I didn't say going through there, there's no additional fees for those riders.
that's
It's
awesome.
just a part of the policy. And then if you do need it, there's a small fee of $500 or something when you first administrative fee to turn it on. But that's it. And so it's one of the things I tell people when they ask, how do you do this or do that? I said, and which insurance and what should you have? And I said, if I knew exactly when you were going to pass away, and if I knew what your finances were going to be like between now and then, and what your health is going to be like between now and then, this business would be super easy. But we don't. So, and that's one of the reasons you get insurance for anything, is because you're transferring risk between how much can I save, or how much can I leverage my money to get other assets. And it's
Right.
really, that's all it's a matter, is just leveraging your assets and managing your risk, and
Love it.
then making educated decisions on which one you want to do.
That makes sense. That's awesome. Well, Roger, we're out of time, but I just want to tell you what a wonderful presentation. It made a lot of sense to me from someone who uses insurance products myself. I'm strictly in term. This makes a lot of sense. So we'll be talking. In the meantime, if any of our clients have any questions, I'll have them reach out to you, Roger. And I truly thank you for being part of our coffee connection this morning.
Thank you. Thank you. And just I want to share one thing real quick. Liz and I met because we were actually on a board of a small profit, nonprofit together for a while. And so, not only is Liz a great agent, but, a really caring heart to help people out there. And it was great to work with you.
Thank you. That's likewise. Thank you. I appreciate it. I look forward to helping each other send your business and send new people to meet and some more connections that we both feel. So thank you very much, Roger, for being here today.
All right. Thank you.